Hello and welcome to this week's edition of Deal Flow, the show that explores merger and acquisition trends across the African continent. I'm Erika van der Merwe. We look this week at deal making in the earlier stages of the acquisition and building spectrum. We talk to specialists about trends in the South African venture capital industry, about deal sizes, activity, funding and prospects, all to come in a few minutes. We start with a quick look at some of the deals that made news this past week. Bidvest has announced that it will close its offer for a stake in drug maker Adcock Ingram early next month in what may be an attempt to speed up a takeover battle that has been delayed. Tencent Holdings, Asia's largest internet company by market value, said it will invest nearly $194 million in logistics and warehouse firm China South City Holdings to develop its e-commerce and logistics business. Forbes Media, the company that publishes Forbes magazine and known for its rich lists, has caught the attention of 6 different companies, including Germany's Axel Springer. That's according to a report in the Wall Street Journal. And in the UK, 2 private healthcare groups may be forced to sell 9 hospitals, mainly in London, after an investigation by the Competition Commission there found patients were not getting value for money. The size of the South African venture capital industry is estimated at about 2 billion rand, although it certainly is a sector that's difficult to define and measure. In studio with me to discuss the venture capital asset class in South Africa, Jason Goldberg, he's a director at Edge Growth, and Jeff Miller, CEO of Grovest Venture Capital. Welcome. Good to have both of you here. Jason, starting with you, if we could define the sector, there often seems to be a fair amount of confusion about what VC is. It certainly is an exciting sector. What is it?
So I guess broadly, it's that class of investors who do what the institutional investors, the major insurers, etc., hate doing, which is investing in early stage companies with relatively little track record, no cash flow to mention, and almost nothing tangible to look at to see the potential of the firm. So it takes a very special set of skills, abilities and experiences to evaluate the future potential of what is at this point a fledgling company. It has a number of underlying stages that are quite well defined actually. You have the concept phase where people literally have an idea or an idea still in progress, move through to the next phase, which is seed stage, where a company is now piloting a concept in a very rough prototype form. And then first round venture capital, where there is a working prototype and now going to market to test if markets will pay money for this thing, and then sometimes multiple rounds of venture capital until the company finally has positive cash flows, and that's when you start to see your more formal and traditional funding sources kick into play.
Right. So Jeff, it certainly sounds risky. So it's a certain risk appetite that would invest into the sector. But just to elaborate a bit on what Jason said, so this is not just your average startup, small business we're talking about here. This certainly is something that's different, that disrupts, and that is scalable.
Yeah, I would say that investors would invest only in venture capital if there was a huge return that was commensurate with the risk, and there is risk, and there's different risk at different stages along the way. As Jason alluded to, you have the seed stage, you have a little bit of a development stage. These maybe all be pre-revenue, and then once a business starts getting post-revenue, then we're a lot more happier because we see a little bit of traction.
So institutionally, Jason, what does it look like? Now, I spoke about the 2 billion. I mean, that really is a rough estimate because we know of the formal fund managers with an FSB license and what they're up to, but presumably there's plenty more going on behind the scenes.
Most is going on behind the scenes outside of the formal institutional landscape. I'd say, there probably is not, to my knowledge, a single traditional institutional investor that actually has a venture capital fund. What you do have is quite a number of individuals with capital under management or small teams with a fund under management that's not actually capital invested for returns by an institution. First Rand Group being an example, their venture fund is primarily a social return fund, but with a small hurdle rate. So most of the action lands up being driven by angels and angel groups like Jeff's seed engine, and Michael Jordan has just stepped out of FNB to set up his own small fund, Angel Hub. And then probably the exceptions would be government funds, like IDC's venture fund, and Tier used to do a lot of investing in much more early stage concept deals, and that's what the landscape looks like. It's a little bit messy.
Yes.
It's a little, they're very skilled and organized small groups in a disorganized system.
So disorganized in the sense that there's no uniformity. So you might have a fund, a venture capitalist that gets funding into it, that it can deploy to ideas, or the funder himself or herself is the person that offers the skills and support, right?
Yeah.
Jeff, so what's the model that you're following?
Well, I run a business called Grovest, which is a Section 12J Venture Capital Fund, which is under the auspices of the FSB and SARS, which allows investors who want exposure to this asset class to invest into our fund, and in turn will be entitled to deduct 100% of the investment from the taxable income. So what this does, it actually mitigates the risk that we were talking about earlier. So therefore, if someone's paying tax at the marginal rate, that would be their risk appetite, or their risk profile would be 60% for 100% of the upside. So to date, there's approximately, I think there's 5 Section 12J venture capital funds that have been registered. And I think we're the only operational fund that is out there currently. And we're on the lookout, for great investments where we can offer returns to our investors.
So Jason, going back to the term you used about it being messy, are there constraints on venture capital funding in South Africa, or is this normal? We know Silicon Valley is huge, but is that simply just because it's a huge economy? But relatively speaking, are we doing all right?
It's a great question. Yes, there are constraints. I think the key word you'll hear in when anyone talks about venture capital is ecosystem. There are multiple parts of the system that have to work together for ultimately there to be good ventures that get funded and succeed. And in South Africa, there are many parts of our ecosystem that are constrained. We have our universities and research institutions don't develop a lot of research that is commercializable. We don't have a lot of entrepreneurs who develop, as Jeff mentioned, disruptive concepts with really multiple hundreds of percents return potential, which attract venture capital. And then, of course, because of those limitations, you have relatively limited capital in the system. So there are lots of limitations, but at the same time, South Africa is doing quite well by comparison to emerging market peers in some regards. We have got a formalized and effective financial market, and within that market, we do have a venture capital class that is doing quite well. A number of good deals done every year that are exciting, and a number of good exits that have produced great returns over the last few years. So it's not all bad news, but there's a lot to be done to take the ecosystem to where it could be.
Jeff, if you take the one element of what the venture capitalist offers to the entrepreneur, the generator of ideas, and one hears the term accelerators and incubators, what exactly are they, and what's the difference between an accelerator and
Well, I think accelerators and incubators play a huge role in developing the ecosystem of the venture capital in any country, specifically South Africa. I think this is where guys are housed by, let's say, seasoned entrepreneurs who have seen both sides of the table, who are schooled and have gone through the different phases on how to grow a business, how to raise capital, how to build a team around them, and obviously how to execute. And so I have absolute praise for what's going on in the venture capital in terms of incubators and accelerators. I think mainly in the private space, I would like government to actually pick up. I think the intention from government is great. They want to stimulate jobs, they want to create entrepreneurs, but I think they have to pick it up a little bit. So I think the intention is good, but the execution can be improved. But from the private incubation and accelerator side, where I'm specifically involved in. I'm involved with a company called Seed Engine, which is an early stage accelerator, and the talent that we see is unbelievable. And obviously the help that we can give to this talent and help them present themselves and grow is a huge opportunity.
Jason, are there any particular areas where South African VC in particular can flourish, so certain sectors, certain technologies that we can compete with Silicon Valley or with the UK?
Yeah, it's a great question. I think, you have to look at the economic structure as a whole and where the economy is strong and what opportunities that creates. And South Africa's economy is historically very strong in the energy and mining kind of cluster. So out of that come a lot of opportunities in industrial supply chains. So for innovations in particularly the mining sector and related. That whole supply chain. So that's where we see a lot of opportunities. Then South Africa has got a lot of service businesses. And of course, through the supply chain, that creates a whole lot more opportunities. South Africa is trying to develop many other industries. You'll see in the National Development Plan and IPAP 3 and all of that. But really, that's not creating a lot of opportunity right now for venture capital. That's yet future. So right now, I would say that where South Africa's strengths lie in terms of venture capital are where you see people seasoned in that kind of industrial and energy space, and I have to say probably our telco space strong as well. People seasoned in those industries, spotting opportunities in those value chains and then stepping out of those environments to take that opportunity into an actual concept, product, prototype, business for commercialization. I'd say that's where our outstanding strength, in my opinion, lies.
Jeff, in closing, so Jason earlier said there are all these different legs to the ecosystem and they all need growth and support, sort of policy support, sort of private sector support and so on. Are you optimistic about the medium-term outlook for venture capital?
Yes, I am. I mean, we've had the opportunity to actually get involved and talk to government and to Treasury, and again, I'm confident or quietly optimistic that we're going to see some nice changes happening in this environment.
Jason, final words from you. Are you optimistic? And maybe taking it a little further, you spoke about many deals having taken place and high return deals. Is this a potentially profitable area for investors given the high failure rate too?
It is potentially profitable. Not everyone will make money. Many will lose it, but it is potentially profitable. My outlook is positive, contingent on government's response to the space. Around the world, the successful VC ecosystems have been successful off the back of a lot of effort, smart effort from governments to support the whole ecosystem in its fledgling stages. Whether the South African government chooses to play that role and provide strong support or not, I believe will be the make or break factor in how the ecosystem does.
Jason and Jeff, thanks very much. Jason Goldberg is from Edge Growth, Jeff Miller from Grovest Venture Capital. And that's it for this week's edition of Deal Flow. Do make sure you tune in same time next week. Until then, it's goodbye.